the longer we're at $100 a barrel, the more you're going to see more and more impact on costs and inflation, and that matters today. And if we stayed 100, there's more upside to jet fuel prices, gasoline prices. I mean, jet fuel prices and diesel prices have gone up a much greater percentage than have oil prices. But at these prices where we're at today, that matters, and it flows through to a lot of things: people's travel, to manufactured plastics and things that we use in our everyday life that isn't fully reflected yet if oil stays at $100 a barrel. So it matters at today where prices are today.
Yeah, and it also matters where that jet fuel is available. So if you look
Right.
at Lufthansa, they canceled flights because they don't have
Yes.
access to the jet fuel. If you look at United Airlines, they actually didn't cancel any flights. They just raised prices because to reflect the higher. So it was an interesting dynamic between Europe and the United States as to who has access to jet fuel. The other play that I've been looking at, I haven't done a lot with it, but are the grains. You know,
Mm-hmm.
partly because they're going to be part of the negotiations between Trump and Xi this morning. I mean, Trump has been trying to push China to buy more ag from the United States, but
Mm-hmm.
you also have higher nitrogen prices because of the Straits of Hormuz being closed. So that means less fertilizer, so less planting. We're supposed to get some data out of the World Agricultural Committee today on plantings. And then you have a drought in the Midwest, which is going to hurt crops. So
Mm-hmm.
I think grains can go a lot higher from here.
Yeah.
Um, and those
Yeah.
are where,
And it's that there's a big drought in the Midwest.
yeah,
So
and and that's hurting the
part of
wheat
the,
crop now.
yeah, and part of the, I don't know how that plays out, but if you have a drought, do they just not plant crops? And then,
Yeah, you have
that takes
higher
away
fertilizer
the demand.
prices. You're going to plant less acreage. Then you get a
Right.
drought, and then hopefully you can create some demand from China. I like the setup.
Yeah.
Sorry.
All right.
But
Time to look at
I
some
mean, another
BG,
thing,
I guess.
yeah. So, in the meantime, the thing I'd mentioned on the stocks is we wrapped up earnings last week from pretty much all the names, and the earnings were good. I mean, you had pretty much beats across the board. Efficiency gains continued to be put up as far as drilling more efficiently and getting oil and gas out of the ground. And the market not fully having reflected these higher oil prices in the quarter, which is going to be the case again here in the second quarter. So the earnings were very good for the oil and gas companies in that regard. So as far as the stocks, we're not selling anything. We're not writing covered calls yet. We're not doing anything in our positions. And other names that reported last week, our core holdings in EOG, and we own some Devon and Diamondback. I like the earnings from all those names. Those names behind C&Q can continue to be my favorite names among the E&Ps. And then we continue to hold Chevron and Exxon and a little bit of Valero.
Got it. All right. Well, let's wrap it up with just a really fast comment on HIMS, HIMS. They reported last night. It was a disappointing quarter. They came out and said, "Oh, look, we're going to raise guidance for the year, but it's always the but." We're going through a margin transition period. We're going from selling our own compounded drug to more of the being a middleman for GLP-1s. We have these peptides that are going to be huge, going to be gigantic. We're not going to be first on the market. Let's see what happens in June when the administration comes out and probably approves the sale of these by compounding pharmacies, which would be great for the stock in the short term. But this quarter was more concerning than that. There are a couple things in the transcript that I put into our subscriber post that I would say were concerning for me, whether they're real or not. But people often give clues on how they're thinking about things and how they say things. So let's talk about a couple of those. So one is that they keep using temporal displacement, which is when you try to change someone's sense of time. So every time, or a lot of the times when they were asked about the $92 million gap loss that came this quarter, they would talk about, well, their guidance for 2030, their long-term guidance is spectacular. And that's fine. There was a cartoon back in the 50s, I think, Popeye, where someone would always say, I'll pay you, if you give me a hamburger now, I'll pay you next Thursday. That's a great strategy if you're in a cartoon. It's not a great strategy if you're a drug company or you're a stock. I don't get fooled by that. I want to see how you're doing now. And this quarter wasn't so great. Margins really compressed because of what I mentioned before. They also talked about kind of revenue recognition, that they're doing a lot of 1 month orders rather than, as they're doing this transition, rather than multi-month orders. So it's shifting from 2 month to 1 month shipments. That means there's a reduced upfront cash collection per order. And that's just temporary. Well, it's only temporary because you think it's temporary. Let's see how that plays out. There were a number of other things that I posted that linguistically that I'm concerned about. I'm not jumping in here. It did, open at $25 and now it's 26, and that's, if you're a day trader, you might say, well, look, people are covering, and there's a huge short position. It's like 35%, I think. The last someone mentioned maybe 30%. And so the volatility around this is something I can't predict, but I will say from a fundamental standpoint, this was not the quarter that really anybody was expecting. The upgraded guidance for the year is fine, but it doesn't offset what looks to be like really stretch goals for 2030. Like that, I don't. Oh, and they've also pushed out profit. They also pushed out profitability from 2026 to 2027. So none of that is good news. And so I'm not trying to buy it here. And I'll wait till it settles down a bit. But that's hymns. Nothing else for you today. Let's wrap it up.
Singing hymns for hymns.
Ooh, I see. I should call you ahead of time. Get all the catchy phrases. Well, with that, it is the 12th of May. You should go to wallstreetbeats.com and subscribe if you're just listening in here and you're a freeloader. We don't like that. Go to wallstreetbeats.com and sign up, or passes.com/wallstreetbeats. Hi, I'm David Maris. If you like what you just heard, we've tracked every single pick we make on the show, every ticker, every thesis, every entry price, over 1,100 picks and counting. We put it together in a free report with our top 10 performers, the reasoning behind each one, and a preview of our full dashboard. If you want access, the link is in the description.